only an Omani entity or Chinese entity, but a multinational entity that can grow. So we are capitalizing on the strength built from Oman Cement's within, and the partnership that has been brought by the government in place. Washington took the lead of majority control of Oman Cement size of 50% to somewhere around 65% in place of Oman Investment Authority. On the last year performance and overall, the metrics, once it comes to the quantitative statistics figures, clinker productions was improved significantly by almost 450,000 ton. After Washington acquisition, they did a specific small investment and tweaks wherever that kind of increase of volume or jumped by almost 18%, as you see, comparable to the year before 2022. Unfortunately, the market was not quite positive into trying to beat the last year, 2022. 2022 was the extraordinary year wherever the macro global effect, wherever the energy and fuel price of coal has pushed the competitors and the neighborhood manufacturers who are selling cements in Oman to bring their cement in. And Oman Cement was totally on a very continuous demand, wherever that kind of 3.45 million sold cement was the air mark that we are trying to beat, hopefully this year, with the support from the customers, the stakeholders all around. And unfortunately, that's the figure wherever you find the 4% gap has been created to the cement sold quantity. If you compare to the 3.45 in 2022 versus the 3.3 in last year, 2023. If you see that we are almost produced to sell, so at least we are not trying to accumulate cement and inventories, as it's mainly meeting the market demand. And overall, once it comes to the product mix, we try to maximize wherever margin is sensibly positive and help us into delivering the value. So if you compare the 2022 to 2023, we have moved more towards the board, which is a bit higher in the margin once it comes and compared to the OPC in principle as a product. The niche and best margin product is OWC, oil well cement, but this will be quite dependent on the demand in the region and whatever the ring fence market that we should penetrate, wherever it's very protected in specific instances in other countries. Oman Cement, along with Washington partnership and the backbone of Holcim being quite the predominant stakeholders or shareholders in Washington, around 42%. We try to see how we can improve on this oil well cement contribution to the next year. This is the stage and the status as of last year. However, our kind of journey has been positively trending over the different metrics, revenues, EBITDAs, and net profit, in spite all whatever extraordinary events like the pandemic, the market volatilities over years. So if you take a trend line drawn from even the 2015 over to 2023, you will find it positive trend. Despite that, if you need to be mindful in the reading of the 2015 to 2018, and henceforth going forward in the future, the impact increase of the natural gas of 3% inherently year on year, and then also the movement and the different cycles of the market that moved into a bit of recession or stagflations in 2016, after that, 2017 and downwards, and whatever we have suffered in the 2020 and onwards in the year of pandemics. An overall comparison once it comes to the net profit and profit before tax, we stand positive to the previous period, and that is almost 20% increase on the profit after tax. With that, we wish to highlight that Oman Cement is trying to deliver better than even the results of the budget and the stretch. If you see the gray columns are the budget set for the different metrics, and Oman Cement in the green deliver the actuals in a better stand, wherever profit before tax achieved 7 million versus 5.8 and 5.9 for the previous year, while in the profit after tax we deliver 6 million versus the 5 million of the previous year and 5 million in the budget itself. However, now the stretch is quite very dynamic, wherever the board is really on top of making sure that we deliver tirelessly around the clock improvement for maximizing the value and the return to the shareholders. Giving this kind of performance and over years, you will find that Oman Cement stock price has took a momentum and reflected this by the uptick once the disclosure came for the dividends recently. So this is the trend line of the from MSX over the past 3 years, and you find the momentum is almost maintained on a positive trends, and hopefully we can sustain the zeal and the feel and the interest in the market to maintain our market very dynamic with a better turnover and volume to be traded specifically for Oman Cement. With that, we wish to conclude for a session of Q&As. If you have any question, please feel free to either be financials, commercial, and others. So we are all gears here. Thank you.
Yes. Good morning. This is Vishen Bhala from Vision Capital.
Yes, Vishal, please.
Right. Okay. Just a few questions to kickstart. If I'm not, I just want to go one by one on the operating side. Your capacity for cement is 3.6 million per annum. Is that correct?
At least, yeah.
Right. So at 3.6
Yes.
million, if I break it down, the company achieved a utilization of 92% last year. Now, is that a sort of target utilization rate for 25, 24 and beyond? I want to just go one by one. That's why I'm going to just break it into multiple questions, if you don't mind, please.
Sure. The CEO is next to me, but our aim is mainly to maximize the availability and utilization around the clock, and whatsoever even it takes that the management sleep here around the clock to maintain the shutdown in a very tight schedule and even the availability to supply to the market. So our aim is higher than whatever you are speaking about. Was you right?
Okay, excellent. Okay,
Thank you.
okay. Right. Okay. Now, in terms of realization prices, we saw the realization price around 20.6, 20.7 reals last year. Is that a sustainable number? Do you see any improvement over there? How do you see the market panning out?
Market is dynamic. Challenge is there. We are a free market now. Earlier year, we used to have some protection on the, I will not call them invading, but the competing and the complementing peers coming from across the border, which is not the case anymore. And Oman Cement has to scratch its back by itself. So we are trying to deliver the value by ourselves to sustain different mix of customers in different jurisdiction and segmented prices to maintain our loyal customers and build new niche customers that can be quite also moved into a transition to a loyal customer maintained from the north areas and the interior side, along with the Sharqiyya.
Because from that perspective, if you're saying the protection is no longer, then the prices would ideally be range bound or sort of on the lower side because of the pressure that comes from across the border. Does that make sense? Because that was the case historically, and I know that last couple of years or recently we had some protection measures. Hello.
Yeah, come in, please.
Yeah, so I was saying, by that logic, the prices should be sort of range bound at the current levels, or might slightly decline because of competition from across the border, because there is a huge excess capacity in UAE. So we would probably see realization prices where they are, if not probably lower. Does that make sense?
It's not a must. It's not a must. It's a balance of seasoned management here. Our commercial director is almost more than 30 years of experience. We brought this gentleman. He's an American colleague, and he has been balancing the portfolio with the management. Alongside now, we have also advanced on the market intel wherever also we comforted our kind of spot reaction to wherever we feel there's a discomfort of customers. And however, we are also moving on these kind of different products optimization and the way that we try to optimize the cost if we need to maneuver for comfort of customers and market. But the case as of current, we have maintained the price and moving forward in a specific new contract, the price is a little bit niched, a few bips up. So sustainability, inshallah, will be there. Positiveness will be there. Our kind of work is not standing to stay still, but rather being proactive and riding and leading the market. As you have seen it in our vision, is to lead, not to be led. Is to not to even see any dust before in our roadway to the achievements, but rather than let the dust be behind us. Yes, please.
Okay. Okay. Now, when I look at your cost, cost of production, effectively, if I look at the average that you've sort of made, because last year there was some one-offs in the third and fourth quarter, but if I look at your average cost of production, historically and last year, it's approximately around 17 million reals. Is that a number that sort of fits in? So is it around that number? Do you see any improvement in that?
Are we taking the impairment and loss provision that you unwinding? That's total, no? Yes. Yeah. So that is total because see now there is always improvement once you have strategic partner. Earlier, our strategy was being quite all the main and major cement producer in the country or manufacturer in the country that we keep specific buffer contingent inventory of the maximum value made in the clinker. Wherever later on it's much be easier that we liquidate and generate cement and sell, as what happens in 2022. The inventory or the buffer contingent inventory on ground was a saver, and that has helped us into delivering that the top and highest volume sold of cement in 2022. However, the philosophy, and even to come from commercial and financial point of view, you will find is not efficiently that you keep accumulating and trapping the cash in inventory, either being quite raw material, either being quite semi-finished product, intermediaries, or finished product, or the stock. So from this perspective, the strategy from the partner that we used to sell and the concept not just only for the cement but also in the clinker, and also to take the effect of impairment of all accumulated clinker on ground. So the hit of around 4.2 million was mainly for the quality deterioration that board has taken it aggressively. Despite the management was and existing management before even Mr. Zhu comes, that we would maintain this clinker and liquidate it to mix it and sell, so at least it can help. However, prudently, the conservative approach directed by the board that we get to hit that clinker and impair it on quality side at 4.2, which really we took the hit this year. If the hit is not recognized or not being quite booked this year, our ability.
Hello?
Yeah. So again, I think we stopped wherever we spoken about the cost being 70 million. The cost does have some what do you call it, impairment on the quality and also some shortfall in the clinker according to the physical inventory. Middle of the year, whenever the acquisition happens, around 450, and then another 500 on the end of the year, so around 1.1 million real has been furtherly hit to the performance. If we add back this to the performance, then the performance will be in the circular of 11 to 12 million real rather than the 6 million real per se that we have disclosed it on the profit bottom line. Hopefully I
Okay,
get your question.
Yeah. Sorry, if you could just repeat that number, 11 to 12 million would have been your net profit if those one-offs had not happened?
Okay, increase the voice. Increase the voice. Sorry, just what was your question?
Yeah. You made a comment right now that if the one-offs had not taken place, the profit would have been probably around 10 to 12 million riyals. Is that net profit?
Yeah, that would be the net profit before impairment.
Right.
Before impairment.
Got it. Understood.
If we have not hit the payment.
Sure. No. I completely get that point. And I'll explain my rationale to you before I let others come on and ask their questions. The reason I'm asking is because you had an investment book which we saw you liquidated, and that's how the 95 paisa special dividend was paid. Now, we as the analyst community are just trying to sort of gauge what a sustainable operating performance could be going forward, purely because there would be no investment income. Now, even on your comment of 12 million real profit before impairment, there was a 3.9 million real investment income. So, moment I adjust that, your profit from operations would be 8 million real. Is that a sustainable number going forward? And that's the reason I'm trying to build it, bottom up with terms of realization, utilization, cost of production, because I want to sort of get a sense of what organically the company can make from operations, because now that would be the only source of income. So if you could just sort of comment on that, and that will give us a better sense.
See, Oman Cement predominantly is meant to be quite a manufacturing of cement products. And now we are trying to evolve into more of a construction material mode by the new strategy. So non-core profit generated from the investment rationale that of surplus cash being deployed and redeployed from time to another according to the opportunity arises in the market. That still will be our quest. We are not hushing not to utilize whatsoever positive pouch or positive opportunity to catch. So our existing balance payment after the distribution will still have a very nice, attractive interest income net position. As of currently, we are zero leverage and we are not having any debt yet. However, down the year, also for your comfort, one of the major parameters that Huashin as a strategic partner has emphasized and strongly following on not just I would call it quarterly or yearly, but actively geared on monthly as well as on weekly and daily is the OCF, the operating cash flow. So the operating cash flow is one parameter that is also under our kind of diligent check and balance. So for us, that cash also will try to deploy it wherever we can maximize the return, and we bring it into a better utilization for further generation of values. Next, please.
Okay. And in terms of any further capex, how would that sort of be funded? What sort of capacity expansion looking at? What time frame? If you could just give some sort of key pointers on that.
See, but let me give you a perspective on how lucrative Oman Cement Company and its balance sheet to the market. From the previous, we're about to be awarded projects, either DOFOM or even what you call the expansion here. The bankers and the communities, whoever are coming, even on the export credit agencies, they've been offering a bit of maximized stand that even at 100% debt funded project finance could be arranged with the different terms and terms and conditions. This is one part. The other part, it's fit for any kind of company to be quite having a balanced capital structure where debt play a kind of use a bit.
Hello?
Is the right pulse now. Some sorry, I think the screen over there got into a bit of disconnect. Can you hear me? I'm speaking from my laptop. Hello?
Yes, now I can hear you. Yes. Please go
Hello.
ahead.
Can anyone let me know if you can hear me, please?
I can hear you.
Okay. So some of those projects have been put on hold because the priority will not add maximum, what you call it, matching to the demand in the market. We are moving on whatever fit and best right approach to maximize optimization of cost. So we are moving on more of alternative fuel consideration with a specific partner, and that's will come in the due course once things get formally agreed. But please be caveating this to whatsoever it might be moved in 2025.
All right. Okay. I'll go back into and let my colleagues ask their questions. Thank you so much.
No, no, each one two questions so if the other audience we can listen.
So we have Mr. Samir from EFG firm.
Thank you. Thank you so much for your presentation. I have a couple of questions. Before my questions, okay, I have a suggestion. If you can switch off your video, that we might get a better bandwidth. Because when you spoke from your personal laptop, it was very clear. So I would suggest if you can continue with that.
No, switch off the camera only. So you will not be able to see us, but you will be able to hear us, right? And
Yeah, that's right.
fine
And
with you guys. Yeah,
that's
camera.
right.
Yes. Yes, please come in, Samir.
Okay, thank you so much. So first question is that your BOD report mentioned about supply chain constraints. Could you give more clarity what you meant by that and how that will impact your operations?
See now the supply chain construction, we are not standing in an alien territory. We are almost connected to the center of the globe. And you understand whatever the distress happens, whatever in the Gaza's and Israel's attacks, and then whatever the Houthis in the nearby Yemen blockade of Gulf of Aden and the attacks that can also reach to the part of even the vessels going to the Cape Town or coming from the Indian Oceans, all this will have its toll and bearing on either the insurance, the supply chain cost. All this will be impacted because also Oman Cement does have requirement for importing and getting some of the OEM, original equipment manufacturers items that need to be deployed and reached or delivered, and some of those material that need to be quite done for the operation. So if this distress get loaded to us, definitely our first maneuver is a pushback. The other maneuver is trying to replace, if we could, and find the best stands. However, if it comes to be as of what happened in 2021, wherever our performance got impacted, for instance, by the cost of freight, wherever I give you an for example, the paper bag for the bag cement got into almost 180% increase. So that was one impact, and we are caveating it. However, our kind of movement and maneuver will stand solid, and we are not just juvenile to leave it to be quite attacking us right and left. We'll have our maneuvers, and we have the different pouches worked by the executive management to counterfeit such impact if God forbid happens. The extremities, however, if any extraordinary war or God forbid anything happens, then that's out of our control. This is whatever we would like to clarify on. Samir, over to you, please.
Yeah, thank you so much. That's clear. Also, could you give some more color on how intense the cement import scenario is in the country? And in that context, what will be your expectation on cement prices this year compared to 2023?
See, whatever we have seen it, even I'm closing now my first quarter. Competition is there. We don't feel that the Oman Cement will be sustaining to deliver the whole requirement for the country. We need complementing peer. We require complementing peer. We wish all our peers in the country internally who are really an integrated manufacturing unit to come to be a full support to the demand in market. We complement each other in the north and the mid areas. Oman Cement is taking a very good comfort of more than around 80 to 85% of the populous areas. Wherever, even with the competition comes from the far areas, they would need to load the transportation cost, which if they come to sell, it would might be not fruitfully right, or even if it is fruitfully right, might not be quite sustainable for long if any change happens, because also the ministry is looking into the over the years. Few instances the government has done this, but it would be really fair for any players, us and any others, whoever either bringing an import, either retailer, either wholesalers, or even the competitors from the neighborhood countries. But our faith that we will still have our maneuver, and we have that kind of room for fixing our kind of customers to stay with us for long to deliver the results for 2025 onwards.
Okay. Also, could you provide more color on your plan in using the RDF in your fuel mix? Like what will be your capex for that timeline, and what will be the fuel mix post the installation of RDF, and how that will impact your fuel prices?
Yeah, no, unfortunately for the disclosure on the estimate of the investment, I cannot just put it per se across the call here, as this is sensitive matter and we are going through a tendering process now. And definitely you as an analyst and other sales shareholders, reps, will be trying to help us to maximize and having an upper hand on the negotiation. However, indication on this, we have seen that market is very having the zeal and interest to support such initiatives using the municipal solid waste, converting it into refuse-derived fuels, replacing the natural gas. That will give us an uphand and a lever to really optimize the cost structure on the fuel and power in a range between 20 to above the 30 if things moves right in the first period.
Okay, clear.
Samir, hopefully I attended your question.
Got it. Thank you so much, Fatih. Yeah, that's it.
Yeah,
From
over
my
to you.
side. Yeah.
Thank you, Samir. No?
So we have Abbas from Vision Capital.
Hi, thank you for the call. Just a couple of clarifications. My colleague asked you a question on capacity expansion, and I was going through the management report as well, and you said that Dukum is still under consideration, but you're expanding at line 5. So when do you decide on Dukum one way or the other in terms of, you want to go and expand that or not? When will the last decision sort of come through?
Honestly, this is to just give you a perspective. We have not written off the cost, but put a provision and a prudent approach and a conservative approach if we would like to proceed later on and resume on the Dukum. But that is not in the soon future as of current market, unless the cycle of the cement get to be quite inverted and the African continent and the Asian subcontinent comes to be demanding, then might be the case, but not as of immediate in our horizon of this 2 or 3 years. As
Understood.
well as unless also the Dukum area come with a big bang infrastructure developments and demand, then we might think about we go into a scale of grinding, then to an integrated full cement plant. All this will be subject to the developments and the movement and the cycle.
Okay,
Over to
thank you for
you,
that. And what do you see capacity at the end of next year, for example, at your current Misfa plant? Where do you see capacity?
Come again, question capacity of?
What do you see the current capacity of your Misfa plant? Where do you see the capacity at the end of next year?
See, now capacity utilization, hopefully we'll try to maximize it and improve on it, because there's a level of tolerance that we can run above 100 to 105, give and take, with a better cautious on the plant and asset integrity. So if demand happens, then we can deliver the required 3.6, giving that availability is around the clock and the team around the day and night in the plant here. So that's
Understood.
whatever we are trying to maximize.
Right. And, I want to ask you about two things that you commented on this call. You said that, Oman Cement is not an Omani company. It's not a Chinese company. It's a multinational company. And obviously, Huashin is a top 10 producer, in the world. And, when we saw them take over, we thought there might be an increased sort of export mix to realize the best prices. But, obviously, exports are still a very, very tiny part, almost non-existent. What's the export strategy? Is the idea that Oman Cement, earlier being a state-owned enterprise, the first idea was security for the country, right? Where you provide what the country needs, and then, of course, any surplus you export. Has that strategy changed with Huashin coming in as the majority owner?
Now, first of all, you put it right in the second quarter of your statements. You have already spoken about creating the sufficient supply to match the local demand. Domestically, we are to satisfy the need for the development and the infrastructure. We still have that pact. However, we go export. We did some satellite export, by the way, on top of the oil well cement. Oil well cement, we are selling it out because that's a niche product, and we have loyal customers across the globe. So we do sell, but that is, if you go back in a few years, that was around the 3%. I would say in 2020, 2021. So it was around 3%, give and take a bracket. The last year and the year before, we are in the circular of 4%. We are trying to tap with the market wherever I would call it very protected market, niche market, good margin in the area of oil well cement, wherever those refineries and drills and not refineries, sorry, drilling companies and the rigs can just use the cement. We maintain our standards of the API, that's American Petroleum Institute license, which has been even updated post the acquisition, which is done on annual audit. And that gets into a comfort wherever other potential buyers, they consider. We honestly, we moved into our new territories, wherever we got now registered in one of those countries nearby, and not in the GCC, but nearby with a sizable demand on the oil well cement. But it's all about tendering now. So it's about tendering and the price and how we stand competitive. If that gets into real life, then there is a big jump on the margin and the contribution to the bottom line, to the profit after the successful award of this potential competition. However, on the other products, whatever discouraging is mainly, first of all, the competition and the cheap prices in other places, and the transportation cost. But however, there is some developments in the arena of SDG-ESG. Many of those now, European, Western, and even the Middle Eastern and other countries, they are moving into a more of a fruitful, green, compliant cement, wherever if it is with low carbon emission, it can be quite considered even with the higher cost to buy. We received some inquiries from Europe, but we haven't been able to finish our kind of ESG's sustainability reporting this year to make it hard landing in compliance with the market by 2025. So there's always this kind of quadrant that we can touch base on. Hopefully, I clarify enough for this point.
No, you did. No, thank you. Thank you for the very well-rounded answer. But of course, I understand that when it comes to bag cement and bulk cement, Oman will continue to be a primary market. You know, you mentioned a very interesting point in the current conversation that, you know, you need strong peers. You need strong local Omani peers to sort of help this market. Now, Resout's cement's troubles are very well known across, you know, for the last year and a half, 2 years. Is there any plan of consolidation? I mean, do you think there's too much of a single party risk, or because you guys obviously have very strong strategic partners, both on the financial side and, you know, obviously on the operating side, is there any sort of synergy or any sort of, you know, way that you can try and sort of take over Resout or merge with them? You know, is that a conversation worth having at this point? Because you mentioned the benefits of it, of course, in the call.
See, I'll give you something even before Fawashin came and after Fawashin came as a leading major driver. Our kind of complementing part was always there. Even we had meetings with their executive management, and even after Fawashin took over, we met them. We are standing beside each other. The only thing, we wish the shareholders of Resout to stand beside Resout. Our side, we are standing to support wherever it takes, even complementing in technical, complementing on spare parts. If it need be, we are available. And that is the brother to brother in the same house. We are serving one industry, we are serving one nation. Price, complementing, the demand is there, is mainly to make sure that we can satisfy the overall total demand in the country. And that's why we would like Resout to come to be a fittest and more, I would call, competing also, as we would like to muscle up with our partners and brothers.
Okay, I understand. And my last question is for Mr. Zhu. This is my first opportunity to interact with him. We know that Oman Cement was already a very well-run entity in the past, profitable, doing well over a long period of time. But obviously, Huashin comes from a different sort of scale. So with Huashin coming in, what are some of the key initiatives that you've taken both on the cost side and, can he talk about sort of, the sort of inputs that he and the sort of new management team has had on Oman Cement, and what is the KPI for the next 2 to 3 years? That's my last question. And, I was hoping to hear from Mr. Zhu. Thank you.
Yeah, see now, gentlemen, if you get to see the statistics on the quantitative side, immediately this gentleman next to me is the guru of maintenance and improvement on optimization and efficiencies and availability of plants. He is the helm of Huashin. Even the commitment of Huashin, once it came, they put their seniors in the drive. And as well also the group CEO of Huashin, you are speaking about a $20+ billion turnover a year. The group CEO himself stands to be the chairman of Oman Cement, wherever they can just steer and deliver value in no time. We abide by the governance of the market, and we go. If it was not in the market and this one, you would have seen much of improvement in no time. However, on the strategies to improve, we realized improvement in the clinker production with no magnificent or extraordinary investment, and that's why we parked line number 4. Also, there is optimization in the know-how and the knowledge transfer and the availability of the expert matter around the clock. Wherever if we need anyone on the safety or the quarries, on the process, on the engineering, with the call we arrange and the people are available. Unlike the whole time we need to end up sending tender RFPs and other and wait for people to come, and but we don't know whether they will drive us. Those people, they come from a solid years of experience. Huashin as a group is 117 years plus group itself, and their expertise is not just only cement. Whatever they are adding on the optimization, it comes from the ecosystem that they carry, the alternative fuel. One of the key elements that Huashin carries is what they call a TSR, thermal substitution rate. Wherever now, for the energies produced from the natural gas, we need to deploy our alternative fuel replacement strategies. Wherever we have, some of which we disclose it on our financial and the board report, once it comes to the RDF, and once also it comes to the tire shape. And magnificently, even with the tire shape being quite also moving on the slow gear and improving substantially over the last few months, we still have found, or we still quest for other alternative material that could be quite supportive. This is a quest never failed and never slept, and the boss is driving it along with the team who are not here but on ground in the market and trying to find this opportunity to really replace cost with a more efficient structure of improvement. Hopefully we attended your question. If there's another question, Adnan.
Thank you, Mr. Fatih, for a very eloquent, well-rounded answer. Just a clarification, when I see the current taxes, the current tax liability in the balance sheet of 1.25 million, now if I assume a 15% tax rate, the profit that I get is close to 8 million riyal. Now that's your budgeted tax liability, right? On the base of your estimated profit that the company can make this year. On the balance sheet item, when I see the current tax liability that you'll pay in this year. So you've already made a budget, and based on that, you projected this number. Am I right? Or am I missing something?
Just a minute, allow me a second to look at this liability 1.2. That is payable. That's immediate payable for the year compared to the previous period, the 1.2.
Yes, so this is for what you expect to pay during the year for the 2024 profits that you'll generate, right?
No, 2023.
The liability will go from our cash flow.
That's what he's
Correct,
speaking about, 2024. He's saying 2024.
No, expenditure we have already accounted for in 23.
Yeah.
And this is the liability which will go out of our cash flow of 24.
Yeah. So it's based on last year, what you owe the government for last year, not based on your projection.
Yeah.
Okay.
Yes.
Okay. Thank you so much. Thank you. That was just a clarification. Thank you. All the best.
Thank you, Abbas.
So we have Joyce Matthew from United Securities. Joyce.
Hi, good morning. Thank you for the presentation and the conversation. Just a few questions that I wanted some clarity on. You mentioned in the conversation that the competition from UAE has come down during the last year. Could you please elaborate on what has happened over the last year in terms of this is the reasons behind this reduction in competition and the import of cement?
Let me, Joyce, thanks, and good to hear your voice here. With regard to whatever happened in 20 UAEs and the other neighborhood countries, they are not purely running on natural gas. If I go into UAE, I think only one.
No, I couldn't hear anything from you.
Okay,
Fatih.
I'll repeat. In 2022, because of the macro global forces and the freight increase due to the end of COVID time, and also the China restriction and the policy of the vessels and the movement, and also the Russian distress, along with the increase of the coal prices, almost like 4.5 times. Coal used to be in the hovering areas of between 70, 80, 90, 100 plus, give and take, dollar per ton. In 2022, this has gone back to almost like 400, 450 and above in some instances. So what this has caused for the coal-fired cement plant to be quite really pricing it and trying to sell whatsoever I would call it clinker for the area which is dry, and they have not been able to offer a more competitive price for the market and the retail customers and wholesale people once it comes to the north, wherever they end up to invade. So that was one depriving reason that the competitors from the neighborhood countries have not been a saver, but rather than looking after their own pocket. So that's why we say no one will save any country by it unless their people and its players and manufacturers try to support the demand. And that's our pact. That's our commitment. Even in 2022, Oman Cement is the only company has committed in writing to the government to maintain our sustainable selling volume, not less than 10,000 metric ton per day. And we end up delivering, and the volume that we have already spoken about, 3.45 million, as being the highest ever in Oman Cement history. Clear, Joyce? Any other question?
So what's the situation right now? Are we still seeing a lot of competition from UAE, or has it subsided?
It is there. Market normalized once it comes to the coal price, but we are not standing to sleep. We are always vigilant. We play our tactics. However, if the government really look into really to protect the quality, to protect the infrastructure, to protect the manufacturers in such industries, like other countries like US and others, wherever they do a ring fence, even Bangladesh itself, while it's importing clinker, but they are ring fencing the cement. So it could be protection that can help, and Oman Cement is available to support.
Okay, got it. And Ms. Fatih, can you just remind us about the capacity? You have a clinker capacity of 2.6 million, and then you mentioned in your call that some operational improvements which has helped in a higher production capacity. So can you give us what's your capacity right now during this 2023 as well as currently? Because what I'm seeing is your clinker production has been almost 15% higher than your capacity. So what has led to this increased capacity utilization, and where do you see the capacity utilization for 2024?
See, it's not 15% per se, but precisely 17.8 or 9, so almost like in the 18% range, around 450 to 60,000, being quite debottlenecked, improved by the technical gurus from Khawashin, and helped us into realizing this capacity improvement. So the 2.6 could be jacked into the areas of circa 3 to 3.2, delivery on the year. And my boss, you see him nodding his face. That is actually we can deliver it whenever it requires. And one tactical move, which we will save for next quarter discussion, is on the clinker. Maybe it could be another saver once it comes to this maneuvering techniques and tactics that Oman Cement might have to evolve with. Thank you, Joyce.
So, if I understand that correctly,
Any
you're
other
saying
question?
yes, yes, I have.
Yes.
Currently I'm seeing I'm the only person who has raised their hands. So, can I continue?
Yes, please.
Yeah, thank you. If I understand that correctly, are we at 3 million right now, and there is still scope for further improvement? Is that what you wanted to deliver to tell us?
And honestly, if we are very, I would call it not going by the governance, we would have improved this significantly. And there's one project should match for a shutdown period. If that realized, then the unleaching of capacity would happen as whatever you expected.
Okay. The next one is on
Thank you.
the next one is on the
Yes,
impairments
please,
that
George.
you have taken. You've taken almost 5 million impairment on the inventory, and you mentioned that the financial hit has been taken, but earlier the practice was to mix old clinker with the new clinker and then release it to the market. But now that the financial hit has been taken, what's the operational strategy? Will we be seeing a small portion of this still this inventory being mixed and used, which will probably help in reducing the cost of production?
I think you hit it right. See, now we definitely going to liquidate the clinker, but rationally, unless there's a very forceful, extraordinary demand happens as of 2022, then our stage will be aggressively doing definitely with no compromising to the quality of the products and not affecting any kind of customer on the demand to be met once it comes to committed contracts. So all of these will be balanced, and definitely if things move, this clinker will be liquidated, reversal will happen, recognition of that profit in the respective period will be highlighted.
So when do you expect the liquidation of this quantity to be completed?
Completed, that's another story because we are. So what was the last you heard, gentlemen? What was the last you heard?
No, your timing for removal of this quantity, selling this quantity.
Yeah, see, it's not about selling the quantity. We never sold clinker. We utilize clinker for internal generation of cement and selling the cement. However, if market, I repeat, if market comes to be as of 2022, wherever extraordinary demand happens and other players of competing forces and internal local peers haven't been able to support, then Oman Cement should push further on the pedal and put the accelerator to liquidate this rationally with no compromising whatsoever to the quality stands wherever Oman Cement brands get attached differently. So this is our commitment, and also we are studying other options down the months. If things get into more recognized or realized, we will pronounce it during the subsequent earnings calls meeting, please.
Okay, got it. And your impairment, the shortfall in inventories of almost $1 million. This is not going to come back, isn't it? Will there be a right back, or this is
come again? The shortfall in clinker what?
Shortfall in inventories that you have mentioned. You took. You said you have taken an impairment of a hit of around $1 million.
Yeah.
Yeah. So is this? Is there any possibility of a right back on this amount, or this is just because of the difference in quantity?
Joyce, possibility of what? Sorry.
Possibility of a right back?
No, that's already hit, and the point once it comes to this, if things quite that was not available because one matter that the method of measurement got changed first of all, And then there was an independent third-party verifier, wherever they use different mechanisms than our measuring by bar and tools and tapes. That the old way we do it in Oman Cement. And then this third party has given that report of what was it? 400. What hit last
445,000.
450. 45. That is by the third party. But during the end of the year, there's some kind of also we adapted the same methodology which we have done internally with the external auditor, and we recognize specific shortfall which we have taken prudently of what, how much? 550,000. So totally it's around 1.1 million. Hopefully it's clear now. Joyce, any further questions?
That's clear, Fatih. Thank you. And another question that I have is on your operating margin. Your operating margin has been...
Next time, Joyce, you need to allow some room for others. However, I'm all ears, please.
See, Fatih, I don't see anyone else, in the queue for the question. That's why I still continue.
No one? Oh, Joyce, then visit me and I'll be happy to answer all those questions rather than I stack all the resources. You are charging me cost high to keep the executive here. However, come in, Joyce. You are a partner and supporter. Please come in.
I'll just ask you the last question that I have is on your margins.
No, I'm all yours. I'm all yours. As long as there are no other audience, I thought that there are others. So good, you're clear. Please.
Yeah, fine. Thank you. The margins, operating margin and EBITDA margin has been very volatile during the recent past. If I look at a quarterly basis or even on an annual basis, it's been very volatile. So now that you have a strategy in place and you got a very strategic partner, what's a kind of a comfortable EBITDA margin that you should be looking at going forward?
This is, as you said, it's subjective to the seasonalities and the market right, because also each EBITDA from one month to another will be variant, and the target for quarters, we try to deliver last year EBITDA and improve on it positively. That's the commitment that we can give into the forward plan. If there's any other question, we are available.
That's it from my side. Thank you very much.
Thank you, Joyce. Thank you, all audience. Over to you, Wasifna.
So, unless you have another question, we can conclude today's meeting.
Any other question, Joyce and the audience? There's no other audience. Thank you, Joyce. Thank you all. Thank you, Afnan. Thank you, boss. Thank you, boss.
Thank you very much.